And I'm just going to roll right into part two, picking up where we left off at the end of part one. Duh. What if, and I haven't done this yet, but as a hobby and as a way to let my hobby help pay for itself. Because, I mean, my sister asked me the other day, oh, any luck on the job search? And I'm like, and again, this has been 2.5, 3 months where this has just exploded. And I wasn't around in 2017, and I'm being told, this is nothing compared to 2017. I told her, I'm probably not going back to work. But I was considering, because I have somebody that's going to help me, setting up mining rigs in my spare bedroom.
Okay.
How are those taxed? Did I get it? Well, I guess let me answer. You let me.
Yeah,
you
that's
answer.
going to be taxed like self-employment income. In other words, you've established a business to, you basically get paid for the mining, and that's going to be your self-employment income. On the other side of the coin, you can also then subtract out the cost of doing that. So the home office deduction there for the spare bedroom, you'd be able to take that. But whatever computer equipment that you purchase to do it, you could take. Even a portion of your internet service, you would be able to take. So
The increase in electricity, if you're able to establish what your base electricity is
exactly.
versus what it is now.
Yeah,
then
as far as
if you-
electricity goes, there's a number of ways to do it, and that's one. If you can actually document how you came up with that. The other way, what a lot of people use is simply, the square footage of the home, and you have the square footage of the bedroom, and then you just take that percentage of your electric bill.
Even if 90% of the electricity is coming from the rigs.
Well, if you can document
if I can prove that.
yeah,
Okay.
then that's fine. You can take it that way.
Okay.
Yeah, I mean, the IRS is all about the record keeping. And a lot of things that you share with yourself personally, it's hard to document what the record keeping is. In other words, for example, you're paying for internet service. How much of that are you spending on your mining activities, and how much are you spending on it personally? So you got to have a method of documenting that. For most people, it's like just keeping a log that says,
Go ahead. I'll turn this off if you need to.
no, it'll pick up.
Okay.
Just establish a log that says, this is when I was using it for, mining, and this is when I used it personally. But that's a lot of record keeping to go through.
But they love record keeping.
They love it. The more, the better for them. And the IRS, they consider you guilty until you prove you're innocent. So you got to keep the records, otherwise they assume that they're not there and they're not accurate. What I usually tell people, and I think the IRS accepts this most of the time, but there's no guarantee, is just keep it for a month or two. And then after that, you kind of quit and just show that, this is what it was in those months, and nothing's really changed in these other months that should be any different. That's not as good a record keeping as the IRS would like, but it's been good enough. Most of the time they accept that.
Okay. It's funny because, I've always had weird sleeping hours, but with this quarantine stuff, and again, basically turning and starting to do this full time. I don't know what day it is most of the time. And now I'm to the point where I don't even know what time it is. I don't know if it's morning, night, or afternoon. I'm like, did you ever see that movie where Tom Hanks was in the airport?
Yeah.
I'm like that. I don't know what time it is, but I'm like a gambling addict that's stuck like Tom Hanks in a casino because the thing goes 24/7. So,
right.
But I've made more money from 1 a.m. to 9 a.m. than or just as much as I have during regular hours. And I'm not working now. This is kind of work. So, and it's something that at least at this point brings me joy. So, okay. How familiar are you with DeFi and well, I guess mainly like providing liquidity to liquidity pools, where you put your money and the collateral corresponding Ethereum into it,
Okay.
and you get a percentage, basically you get a commission. Now, you don't have control anymore of how much of that is Ethereum and how much of this is that other asset, because it'll seesaw back and forth like that. But you also get a percentage, whatever your percentage of the liquidity pool, you get that. Would that be considered like normal, regular income also?
That you could treat that more as you made an investment into. I mean, you could treat it like capital gain. You made an investment into the liquidity pool, and then what you make off of it, is what you made. So, if you're getting a monthly income, then that would be treated more like interest. If you were able to sell out, then you would have a capital gain part on it.
Well, the good part about that is it's not actually selling at that point. You basically just withdraw your money.
It'd be like if you invested in a mutual fund, for example. You don't buy and sell stocks in a mutual fund.
Right.
And it's going to be treated like the same kind of scenario. In other words, if you buy in a mutual fund, they're going to pay you interest and dividends on whatever investments they make they transfer to those. And that's the same thing that you would be making in a liquidity pool. What they give you money-wise could be treated as a dividend or as interest. If you got, amount you put in it and the amount you take out are different, then that would be treated as a capital gain.
Okay. Are there any other tools, any other steps that you could take as far as legally, any other deductions other than the ones that you already mentioned?
The one thing you could do if you actually start doing this, full time, is you can call yourself a trader, and then treat your trading activities, instead of using capital gains, you use them as just self-employment income. And a lot of times that works out better. You are able to deduct a lot of your expenses for doing that. Computer equipment, again, the home office deduction and all that. And sometimes that pays off for people to use that method as opposed to capital gains. Particularly if you're doing a lot of short-term gains and you're talking ordinary income tax rates anyway. The disadvantage of being self-employed like that is you do pay Social Security tax, and you're going to pay the entire amount since you don't work for anybody. That's not necessarily a disadvantage in that it will go in the Social Security system and help build up your Social Security income. But you will pay that. But for a lot of people, it still comes out ahead for them to do that than it is to use capital gains transactions all the way through. That'd be the only thing that I could think of. And it's a method you'd have to go through at least the first time to find out whether it was better or not.
And assuming Social Security doesn't go bankrupt by the time that it's my turn to start getting it,
Exactly.
then that's good. And just because I'm stupid, what typically percentage is Social Security tax?
It's 15.3%. It's high. Higher than the federal income tax.
So you'd be paying the 30 or whatever,
Yeah.
plus another 15 to do it that way?
Yes. You would be.
I don't see the advantage of that, other than maybe.
Well, you're able
I
to
get
deduct the
that.
expenses. That's the advantage. The expenses that you have associated with it. If you don't have a lot of expenses, is probably not the way to go.
I
You're
don't
probably
have a lot
better
of
off with
expenses.
capital gains.
Okay, yeah, it's better to do that. You know what, actually, that's not nearly as bad. I was thinking that the short-term capital gains was gonna be a lot higher than your normal rate, and then if you held it for longer than 12 years,
12 months.
then, 12 months. I said 12 years before too, didn't I?
Yeah.
I'm sorry. If you held it longer than 12 months, then it was significantly less, and it is, but really right now you're at 30%. If you're in the 30% tax bracket, it's 6 of one, half dozen of another.
Yeah.
Well, see, you actually, this is, that's a lot easier for me to swallow than I thought it was originally going to be. All right, I actually feel a whole lot better now. What if you could talk to anybody now? If it's okay, unless you're on the run, but if you could talk to any crypto investor out there, whether it's a guy with a little bit in the game or a lot in the game, what are to you? What are the important things? Because I give you an example. We were talking in the Telegram group this morning. They're like, "Well, if I do that, then I got to pay taxes." I'm like, "Dude, just give to Caesar what's Caesar's, and quit looking over your shoulder and shut up and move on with life."
Yeah, I mean, taxes are nothing but legalized theft, and so every time you do something, you have to realize that they're your partner, whether you like it or not.
Right.
You know, and there's really no way around it. You know, they've got all the cards and they know how to play them, and they're gonna get their money from you.
Well, there is a way to get around it, but it's never full time. They're going to get you eventually.
Well, not legally.
Right.
But yeah.
Do you mind answering a couple of questions that they have posted? If I haven't already asked
I'll
them?
try. I'm sure.
Let's see what they have to say here. Staking, you already answered that. It says with Coinbase doing a lot of customer staking, I'm sure there's something in the works for clarifying. That doesn't matter. It's going to be the same as what we were talking about earlier with taxes on tracking. It says the IRS classified crypto as property. So by leasing out our property for regular passive income, could it possibly be categorized as rental income?
I don't think they're going to let you get away with that one.
No, I don't think. Yeah, I don't think that's.
I mean, that kind of explains some of the way taxes work. I mean, when you have ideas like that, and it's what we call the gray area because there's never been a court ruling on it. If they rule in your favor, that's white. If they rule against you, that's black. But everything in between where there's no court ruling, you can take it and test it and see what the IRS does with it. And then you'll have whether it's moves into the white or black or stays in the gray. So there's never an equivocal answer. I mean, a perfect answer as to what you can do and can't do with taxes. So that's an idea that this guy has, and it might work. I don't think it would. That's my own opinion.
I don't want to be a test case. I want to go unnoticed, which is the main reason that I.
Well, that's it with most people. So with what he's proposing there, I think that would be a test case, and I think they would probably test him on it and say, no, you can't do it that way, and see what he wants to do about it. So I'm not saying it can't work, but I don't think they would let him do it that way.
Yeah, we had somebody that came in. I told you I worked for Sleep Number. I had somebody that came in and wanted to tax exempt, and he gave me his farmer's tax thing. I'm like, it doesn't work like that, brother. Give me a prescription, and I can do that. Well, are there any other? What if you were a victim of a scam, or or some kind of theft, or you were, whether it be the exchange was hacked, or you were stupid and did one of these Twitter scam things?
You have to be certain that the coins are gone, the money's gone, and you can't recover it. But once you're to that point, then the asset is valued at zero. And so you still have your cost basis of what you paid for that asset, but then it's, you're going to take a loss on that one. That's all it comes down to.
Okay. What about, and it's not as common right now because obviously we're not into adoption the way that a lot of these people would like to do. And I keep telling them, guys, you're younger than I am. This adoption stuff, I don't think it's gonna be we're gonna get to an adoption point in my lifetime, maybe in my children's. And I'm actually, as far as investments right now, I'm 100% in crypto. Thank you, Lord. But which I want to leave them long-term assets, which are going to be good for them. And which is why that I leave a footprint in Tyler's calls because he is a long-term guy.
Okay.
And so that's the kind of stuff that I want to leave them. What if you have dual citizenship or bring crypto from another country or failing state to the United States?
Any income earned in the United States is going to be subject to tax.
Okay.
And any U.S. citizen is going to be subject to tax regardless of where the income is earned. So dual citizenship, I mean, I'm assuming one of those citizenships is a United States citizen.
Yes.
Therefore, it's not going to help him. Everything's going to be subject to tax. You know, so if you have a dual citizenship, say you're written in France and you come into the United States, then only what you earn in the United States is going to be subject to tax because you're not a U.S. citizen at that point. But I'm assuming when he said dual citizenship that he is a U.S. citizen as well as another. So he's subject to tax regardless of where his money's at.
Now, I started down this path with that long and rambling thought, but I never asked the question. I started down that road to ask. So, if we use crypto to buy goods or services, is that a taxable
It's
event?
a taxable event, yes. Sure is. You simply convert whatever the value was at the time of that transaction into dollars. And then that becomes a taxable event.
Okay, that's what I thought.
Yeah.
Gift, if like right now for the last year, what I've done is I kind of knock around, and whenever I eat out, because I love waitresses, I love nurses, I love waitresses, and whenever I go out, always at the end of the meal, I go, all right, so here's the deal. If it's not too busy, I go, here's the deal. Do you want your tip like a regular person? Or do you want your tip twice that amount in Bitcoin? Or actually Ethereum's an easier paper wallet for them to use right now. And so I've stopped doing the Bitcoin because...
So I'm going to take you up on that.
So far, one.
Okay.
However, if they knock my socks off, and I know I'm going to do this, I just want to, most of the time I want to see them twist in the wind, and it got to be so painful watching them twist in the wind that I don't even let them do that anymore. If they knock my socks off, I give them both.
Yeah.
And then I teach them how to use it. And again, some of them I've heard from before, some of them I've not heard from again. But I'm working with 5 right now that I just found 5 that were awesome. And like I said, I tipped them, I gave them this, and to get them into, and at least 4 of them want to learn what it's all about, which is going to make an interesting series on YouTube because they're all drop dead gorgeous, which is cool. As far as when I gift it to them, and it's only like 1/10 of an Ethereum or something like that.
Right.
But taxable event,
Yes.
that's what I thought. What questions am I neglecting to ask
Let me
you?
explain one thing that I think is the most unfair thing in the tax code. Okay, but it's there. If you have losses, you can take $3,000 worth of capital losses every year, and that's it. So if you have $20,000 in losses, you get 3,000 of them that year. You get to carry the other $17,000 over to future years. So that you can take $3,000 a year, or you can apply that $17,000 against any future gains that you may have.
That was actually one of the questions I was going to ask you.
Yeah.
Then
To me, it's one of the most unfair things in the tax code, but that's the way they do it.
so the gains have no limits, but your losses are capped at 3,000.
Exactly.
That's such a racket.
It is. I think it's one of the biggest rip-offs of the tax code there is, but that's just the way it is. Well,
Okay. What else am I forgetting to ask you that other customers have asked you in the past?
The biggest thing that they need to do that I see, and unfortunately it's what makes me such an expertise at it actually is the record keeping on it. People just don't keep the right records, but it's difficult to do. I mean, let's use Bitcoin as an example. You buy a Bitcoin, but when you sell that Bitcoin, you're selling 0.51709 worth of that Bitcoin, and now you got to match that up every time. And that's what where I come into play is being able to do that. But you've got to have the better the record keeping on what the transactions were. The date that you bought, how much you paid for it, what the coin was, how much coins you got, and then the same thing when you sell. And a lot of times in cryptocurrencies, you're buying Bitcoin and you're selling it and accepting Ethereum for it, for example. And it's not dollars, but all has to be converted into dollars at that point. So you got to know the exact point where that was. So I mean, it's a never-ending nightmare.
The goalpost is always moving.
Yeah.
I mean, I give you a good example. There was one time where the Bitcoin network was running really slow, the Ethereum network was running really slow, and I needed to shoot something over because I had my eye on something. So I sold Bitcoin for Litecoin, taxable event, sent the Litecoin over to the exchange. During that exchange, or by the time that I got around to selling it back into Bitcoin, or if I did it in Ethereum, but this one particular time, during the transfer, and by the time that I got back to the computer, Litecoin had some huge spike. So it's the target's always moving. How do you track that? Because I mean, and I'm old, so for me to think in 8 decimal places is not an easy transition after only going 2 decimal places for all these years. But now that the value can change in the middle of a transaction, how do you track that?
Yeah, that's the difficult part. But obviously, from a client perspective, your job is just to keep the transaction, to know exactly what you bought, when, and what you sold when, or the key criteria.
Okay. All right. So, I still need to do my thinking on. I think what I'm going to do is go ahead and take a decent portion out and just pay down, or at least pay them all significantly. Maybe do it in phases. That way, it's not one big bite of the apple.
Yeah, that's another good thing. I mean, anytime you're taking a capital gains, transaction there, I mean, a lot of times it's better just to spread that out, even if particularly at the end of the year. Boy, if you can push part of it into this year, part of it into next year, you come out way ahead. But, I have people do that all the time. They want to, take money out of their 401k, for example, and I tell them, well, take it out part of this year, part next year. That way you're not pushing yourself up into the next tax bracket every time you do that.
Okay. So is there, this is one of the questions I wanted to ask. Come the end of the year, December 31st, if a particular asset that you think is going to go up, but let's say that for whatever reason it's doing a correction, or maybe it's going down, would it behoove me at that point, if it's down on December 31st, to sell it for less, and on January 1st buy it back, even if it's at the same price?
You have to wait 30 days for that to work, to rebuy it. In other words, if you sell for a loss and try to rebuy it, from a tax standpoint, they call it a wash sale.
Yeah.
And they just basically don't count it, as a the difference there. So you just end up, it doesn't make a difference at that point.
Okay.
And so to really pull that off, you have to wait 30 days before you rebuy.
That's a risky 30 days. It could go through
yeah.
the roof at that point.
Yeah. Yeah, it doesn't usually pay to do that. What I tell most people from an investment perspective, invest. make your decisions based on the investment, not on the taxes.
Right.
You know, the taxes are just your partner, that's your consequence, but otherwise, make your investment decisions based on your investment.
I mean, because as I'm sitting here listening to what you were saying when we were first sitting down, if I'm going to pay, again, if I'm, let's say I'm in the 30% tax bracket, and if I have a credit card or a store credit, or whatever, and the interest rate, we'll say is normal retail, so stupid interest rate, anywhere from 15 to 20 something, it could be, right?
Mm-hmm.
This, then I'm really not paying 30% taxes. I'm really only paying 12% difference between what I'm paying in interest versus what I'm paying in taxes.
Yeah, I mean, make sure it's something you're going to buy anyway, but yes.
Well, no, I mean if it's an existing debt.
Yeah, yeah. I hear that all the time with self-employed people. You know, oh, this was tax deductible, so I can justify buying it for that reason. You're still paying for it.
Right.
You know, I mean, the tax deduction shouldn't enter into your decision. Yeah.
Right, and that makes sense. Okay. So let me kick this around. I think that's what I'm going to do, and I am going to need your help. Is that my guy running out of energy there? What do you need from me to move forward? I don't have it with me right now, but I can get it to you.
The copy of your most recent tax return is always helpful. You know, any of the other 1099s or W-2s or anything like that you got in, need. But as far as your cryptos, it's just the transaction history.
Just the transaction history.
Yeah.
From as many different exchanges as possible.
Yeah. The exchanges now, if you went through an exchange, I can usually
just print that some of it.
Yeah, but what I usually like to do is access them myself, which means you got to help me get logged into your account.
Okay.
Which, you know, I don't want to stay in there, you know, so as soon as I get out, you want to change your login info, because I don't want to be able to access your account. But you can help me get into it, and then I can pull the information off in the way that I want it. And that's usually a lot easier and less expensive than me taking the stuff that's not on the exchange, which I have to manually input into my software program to work with. And that's time consuming, and therefore I charge you a lot more for doing that.
Okay.
So if you have an exchange, yeah, I'm going to ask you to let me log into it. You know, some people, of course, are very scared about that, and I understand that. There's two ways we can do it. One, we can sit right here and you can get on my computer and log in yourself. The other way that most people that don't really have too big of a problem with it is, you know, we work over the phone, you know, and I get what I need, and then when I'm done, I tell them, and they go in and change their login info.
Okay. Well, if you get two-factor authentication.
Well, that's the biggest problem with it. I mean, that's why we have to be able to get together for it.
Right.
It's because, you know, you give me your login info and I log in, they send you this two-factor authentication. So if I'm not here, I mean, if we're not together, then you got to text me that or email me or call me. It's usually the best way, because we only got like, 10-minute time frame on most of them to get that in there. And then they even come back and say, well, this is a different device than what you've been using, and so you got to send me the email that'll confirm that.
Yeah, and actually, I don't have a problem with that. That's
Yeah.
cool, because I don't need much. I don't need anything on the exchanges anyway.
Yeah, most people don't have a problem with that. Some people do, but the ones that do, I'm going to have to charge them more, because I'm going to have to manually input everything. That's all. So.
All right. Is there anything else for your average to part-time to small guy all the way to your big fry? Is there any other important message other than what you were just sharing that you think that's important and why they should talk to you or somebody in their area?
Well, that's the biggest part, is being able to, what we call, reconcile people's accounts. You know, getting the information into the format that the IRS wants it. And so, you know, if you can't keep it that way yourself, and it's very difficult for most people to do, then yeah, I've got to be able to do that for you. And then I'll be honest with you, that's where my expertise is. This is what I do that other accountants can't do. And you know, that's the biggest thing.
Like I said, the first guy I talked to on the phone, I hung up with him pretty quick. Yeah, I don't know. And I'm like, really? You don't even own any crypto, but you're going to offer? Okay. All right.
Well, and that's the thing with the other accountants. I mean, they understand the basic concept of how it works, but they can't help you put your information together to make it for them. That's why I told you up front that, you know, I have several clients that have their own CPA firm already, and all they want me to do is do their capital gains on their cryptos. And that's it, because their CPA firm can't figure out how to do that. You know, they can't help them put that data together, and that's the biggest thing that I do.
Okay.
But then when you get into specialized situations like, you know, forks and airdrops and mining, they don't know how to
They don't even know what it is.
Yeah, they don't know what it is, so they don't know how to deal with that.
All righty. Well, I'm going to ask you some other questions, but I'm going to turn this off first, and
Okay.
then I'm going to leave you alone. I really appreciate you doing this, because there's a lot of people whose questions you help answer today, and I'm sure that there are some that. Oh, that's not me beeping, is it? I thought that was me beeping.
Is there something beeping out there?
There was. I thought it was telling me my battery was running low, but I'm an idiot.